Have you been wondering how to save on property taxes for your home? Well, stick around because in this episode we will be discussing tips on doing just that.
Welcome to our channel. I am Corinna.
And I'm Megan.
And we are your team weaver.
We are with I Think Realty, located in Winter Haven, Florida. On this channel, we give tips for buying and for selling.
If you own a home, you will find out very quickly one of the joys of home ownership is paying property tax. We do not have a state income tax here in Florida, so they make up for the loss of funds through property tax, which averages around 2% of the home's value. That can be a substantial amount, so stay tuned to find out several ways to help lower your property taxes.
Your initial valuation should be about 85% of what you paid for your home. If it's more than that, you should consider appealing the value of your home. You can ask that your home be reassessed to determine the taxable value. If the appeals board sees fit to lower the home's value, your tax will be lowered. The tax is computed by multiplying the home's taxable value by the current tax rate. In order to be successful with this, you will need to show that the appraiser has incorrect information, such as the wrong square footage or that they valued your home above the surrounding comparable properties.
There are lots of tax breaks for property owners that most people are not aware of. If you are a resident of Florida and you meet one or more of the requirements, you could possibly qualify for a reduction on your tax bill. Even though there are several types of exemptions, we are going to touch on 5 of them.
Number 1, the first and most common is called Homestead. In the state of Florida, these exemptions apply up to $75,000 of your primary home's value. You will need to file the DR 501 form with the county's property appraiser. Seniors may qualify for more, and deployed service members may also qualify for more. It just depends on the number of days deployed. Once you have applied for Homestead, the assessed value of your home cannot increase any more than the Consumer Price Index or 3%, whichever happens to be less.
Number 2, you could qualify for an exemption if you are a longtime resident of 25 years or more, a senior of 65 years or older, you meet a certain income requirement and have a home worth less than $250,000, or if you've added on to your home for a parent or grandparent over the age of 62.
Number 3, there's also something called portability. If you have owned a previous home, you can apply for Florida Form DR 501T with the property appraiser's office. In short, you build up portability as time goes by. Market value minus the assessed value equals the portability. You can take portability with you from one home to the next, but it maxes out at $500,000. You would then have an exemption of $500,000, which means that you would pay about $10,000 a year less in taxes than you would have otherwise.
Number 4, another possibility for a tax exemption would apply to surviving spouses of military or first responders who died in the line of duty, or military service members who have died from related causes. Vets over the age of 65 who have been wholly or partly disabled in combat may also qualify for an additional tax discount.
Number 5, if you are a disabled civilian, blind, or permanently disabled, you could possibly qualify for a $500 property tax exemption. If you have any questions on tax break tips, just be sure to call your local property appraiser's office.
Thank you for tuning in to our channel today. If you found this video to be helpful, make sure you give us a thumbs up, let us know your thoughts in the comments below, and subscribe to our channel so you never miss out. We upload videos every week on Mondays, so we will see you over in the next episode.